Hello students, welcome to BYJU'S IAS. In today's live session, let's have a discussion related to some of the very important economy related articles that have appeared in various newspapers between 23rd of October to 29th of October 2021. The first very important article is related to a very recent proposal of RBI to regulate or to basically classify the NBFCs into 4 categories. Now, in the earlier videos, specifically in the month of January this year itself, we have already discussed what is a proposal of RBI. In a nutshell, if I just want to revise it, RBI has basically proposed to divide the NBFCs into 4 categories. There will be 4 types of classifications as per which NBFCs will be classified. What are these particular 4 classifications? The topmost will be called as a top layer, the bottom will be referred to as the base layer, and above base layer there will be middle layer, and the next one will be upper layer. Is it okay? So, this is the 4 type of classification or 4 types of the classifications that has been proposed by Reserve Bank of India. Now, why this particular classification has been proposed? First and foremost, please understand, NBFCs are very important in the Indian economy. There is a particular reason why these are called as a shadow banks, and this is because the NBFCs provide huge amount of a credit apart from the banking sector, or let us say the banks scheduled as well as non-scheduled in case of Indians banking or in case of overall Indian economy. And that is the precise reason why NBFCs are very important. And in the recent times, there have been certain issues with the functioning of the NBFCs. There have been issues with respect to the performance of NBFCs, the NPAs in the NBFCs, the losses which are being incurred by these NBFCs, and the management issues related to these particular NBFCs. To address these particular issues, RBI last year basically came out and stated that they will be looking into the regulation of these particular NBFCs. And this particular year, in the month of January, came out with a proposal to divide these particular NBFCs into 4 categories which have been given here. And as you keep on moving from the bottom to the top, the regulation of RBI on these particular NBFCs will keep on increasing. That is the important point with respect to this classification. And second very important point, earlier I said it was just a proposal. In this year's January month, RBI came out with a proposal, and last week RBI basically stated that from October 2022, these particular regulations will come into force. That is, all these particular NBFCs will have to come under the regulation as the proposal given by RBI. Now, what are some of the very important changes that will happen once this particular regulation will come into force? First and foremost, the classification of NBFCs is going to change, and just to be more precise, the highest number of NBFCs will be coming in the base layer. Remember this, highest number of NBFCs will be coming under base layer, and the top layer will be kept vacant as of now. There will be no NBFCs which will be classified in the top layer as of now. Over a period of time, if there is a certain issue with respect to some of the NBFCs which are very systemically important for the Indian economy, then RBI says, I can bring some of these particular NBFCs and classify them or keep them under the top layer. And when they will keep under the top layer, the regulations or the guidelines which will have to be implemented by these particular NBFCs will be much more stringent compared to all the other NBFCs. That is one very important point. Second very important point, the classification of NPAs. The methodology to classify the accounts into NPAs has been changed now. As per the proposal of RBI, earlier in case of NBFCs, the NPA is to be classified only when the repayment was due for more than 180 days. Please be very careful here. Why? In case of the banking sector, the classification of an account into NPA is done whenever the due is for a period of 90 days. But in case of NBFCs, the account will be classified as an NPA when the overdue or the payment is not done for a period of 180 days. Now, this will be changed and brought down to 90 days. Is it okay? It will be brought down to 90 days. Second very important change. Third very important change, net owned funds, NOEF, has been increased. Earlier in case of NBFCs, the net owned funds was limited to at least 2 crore rupees. Now, as per the proposal given by RBI, this will be increased to 20 crore rupees. Is it okay? So, these are some of the very important changes that has been proposed by RBI with respect to the classification as well as regulation of these particular NBFCs. Now, with relation to this, I have given one MCQ here. Consider the following statements. First statement, the banks as well as NBFCs are regulated by RBI under the RBI Act of 1934. Please be very careful with respect to this statement. Why? In the report that was published by RBI, RBI used a statement or a term called as the regulation arbitrage. Is it okay? They used a statement or a word, regulation arbitrage. What do you mean by regulation arbitrage here? The report basically stated that the act which is giving powers to RBI with respect to regulation of banking sector is different compared to the act which gives power to RBI to regulate NBFCs. Remember this, in case of NBFCs, RBI derives its powers to regulate this as per the RBI Act of 1934. But what about the banks? For example, scheduled commercial banks. From where does RBI get the powers to regulate this? It gets its powers to regulate these particular banks from the Banking Regulation Act of 1949. Is it okay? Banking Regulation Act of 1949. So, this two different levels or two different provisions, a set of provisions which will give power to RBI to regulate two different sets of lenders in the market was referred to as a regulation arbitrage by RBI. Okay. So, based on this, first statement wrong. Second statement, RBI has made it mandatory for all the NBFCs to adopt core banking solutions. Even this particular statement is wrong. Why? As per the proposal of RBI, only those particular NBFCs which will have over 10 branches. Remember this. Only those particular NBFCs which will have more than 10 branches will be asked to mandatorily come under the core banking solutions. They will have to be part of or they will have to adopt core banking solutions, or in simple terms CBS. Right. So, this is a proposal which has been given by RBI now. So, both the statements are wrong. So, right option will be option D, none of the statements are true. Let me go to the next article here. P2P lending machine firing on all cylinders. First and foremost, what do you mean by P2P? Okay, P2P stands for peer-to-peer lending. Okay, peer-to-peer lending. In simple terms, it's a platform which will connect the lenders with borrowers. Is it okay? It will connect lenders with borrowers. There are multiple P2P platforms. Many of them have been given here. For example, there is a Facent, Lendbox, Lending Club, Lending Cart, etc., which are nothing but the types or the examples of peer-to-peer lending institutions in India. That's the first point. Second very important point, P2P comes under the regulation of RBI. Remember this, P2P lending comes under the regulation of RBI, and RBI has basically given certain guidelines as per which these particular P2P platforms or institutions are supposed to provide this particular platform which will allow them to connect the lenders as well as the buyers. For example, what is the total amount of loans which can be borrowed through P2P has been defined by RBI. What is the total amount of exposure, that is a lending which can be done through P2P, has been defined by RBI, etc. So, the regulation is done by Reserve Bank of India. Second point. Third very important point, why this particular article is discussing P2P in the current context. In the recent times, the article says that the banking sector as well as non-banking financial companies have reduced their exposure to retail borrowers, especially those particular borrowers who do not have very good credit rating. Generally, when you go and apply for a loan in a bank, they will ask for a credit rating, or another term for that is CIBIL score. If your CIBIL score is very high, probability of a bank lending to you will be very high. And if your credit rating is very poor, it simply means you are a risky borrower. For a bank to give loan to you, it is taking a much higher risk in such situation. So, in recent times, the article says that the amount of loans which the banks as well as NBFCs are issuing to retail investors, they are much worried. They are reducing their exposure in terms of lending to these particular borrowers. And the reason is very simple. One, as it is very risky to lend to borrowers in the current context. And second, these particular retail borrowers have very low credit rating. Means what? It is very risky to lend to them. And as a result of this, these particular retail borrowers are finding it difficult to raise a loan or borrow from the market. As a result of this, these particular retail borrowers are more and more taking loans, are favoring taking loans from P2P lending institutions or platforms. That is the first reason. Second reason is, what about the lenders? Why are the lenders lending more and more on the P2P platform? The reason for that is, one, in case of the lenders here, these are nothing but the investors. Is it okay? These are nothing but investors, and any investor would want to earn higher rate of interest. He would want to earn more and more returns on their money that they have lent in the market. But as per the recent survey which has been provided here, the overall or the average earnings either in the market, for example in the debt instruments or in the banking instruments, averages somewhere in the range of 3 to 7% per annum. Is it okay? Annually, for every 100 rupee that these particular investors or lenders are making in the market, they are only earning in the range of 3 to 7%, and these are not happy with this kind of a return. Whereas if they start lending through P2P, the rate of interest based on the different credit rating will be different, right? As per this particular article, the rate of interest charged on the loans which are given on P2P platform is in the range of 10 to 18%, which will vary from one borrower to another borrower based on his credit rating. So the option here is, one, either invest in these kinds of instruments, earn moderate rate of returns, or give loans through P2P platform, earn higher rate of returns or higher interest rate. So the investors are choosing to give more and more loans through this particular P2P platform. That is one reason. Second reason is, this particular platform of P2P is basically giving an option for these particular investors to diversify their investments. Is it okay? It is allowing them to diversify their investments. It is one more option for these particular investors to give or to invest money and earn higher returns from this particular route. So these are some of the reasons why more and more the lending as well as borrowing is taking place through this particular P2P lending platforms. And as per this particular article, the overall asset size of this particular industry is over 5,000 crore rupees today. Right? So these are some of the very important points. Please be very, very careful. Now next article is related to Basel III. That is, RBI has decided to extend Basel III regulations or capital framework, right, to all India financial institutions. Now before I discuss what has been proposed here, please understand the concept very, very carefully. At the top of this, there are non-banking financial institutions, NBFIs. Please do not confuse between NBFC and NBFI. Why? NBFI is a much bigger umbrella term. Under NBFIs, you have a different classification like this, right? At the leftmost, I will classify this as AIFIs, All India Financial Institutions. The second classification will be primary dealers, and the third classification will be non-banking financial companies, NBFCs. Is it okay? So one is All India Financial Institutions, second one is a primary dealers, and the second one is non-banking financial companies. And again, NBFCs are further subdivided into deposit taking, non-deposit taking, etc. But focus on the AIFIs here. AIFIs are regulated by RBI. Is it okay? These are regulated by RBI. But please understand, the origin of these particular AIFIs has been done with the passage of multiple acts. The Parliament of India has passed multiple acts. As a result of these particular AIFIs have been established. Now if you ask me, sir, why the act has been passed? Government of India at various points of time to support various types of borrowers or sectors or industries has passed these particular pieces of legislation, and the role or the responsibility has been given accordingly. For example, Exim Bank is a type of AIFI, right? Export Import Bank. What is the main role of this particular Exim Bank? To provide credit and to promote these particular exports from India to rest of the world, right? There is a SIDB, Small Industrial Development Bank of India. There is a National Housing Bank, etc. Right? So these are some of the all India financial institutions which have been set up with the passage of legislatures or legislative pieces by the Parliament of India, but these are coming under the regulation of RBI. Now RBI simply says that over a period of time, these AIFIs have become very important. Why very important? These are lending either directly or these are involved in the refinancing for various sectors, various types of borrowers. For example, SIDB is involved in Credit Guarantee Trust for micro and small enterprises. It is also involved in the PM Mudra Yojana, etc. So there are various roles which are played by these particular AIFIs, which are either providing the credit to the borrowers or through the industries or sectors either directly or through the refinancing as such. And as a result of this, the risk faced by these institutions also has increased. So these are playing very important role. There is a risk associated with the business done by these particular institutions. So RBI says, because I am regulating, I just want to ensure that any type of a risk that you are facing with respect to your business activities or lending activities will be in control or will be under control. And this has been proposed to be done with implementing Basel III guidelines on these particular AIFIs as well. Now Basel III is basically one more set of guidelines which has been proposed by Basel Committee on Banking Supervision. Is it okay? Remember the short form here, Basel Committee on Banking Supervision. India is a member of this particular Basel Committee. Now BCBS over a period of time has been proposing or has proposed 3 sets or 3 rounds of Basel guidelines. One is a Basel 1, Basel 2 and Basel 3. Right now in case of the banking sector in India, we are implementing Basel 3 guidelines. And Basel 3 guidelines basically have 3 pillars, right? One is associated with the capital, second one is associated with the supervisor review, and the third one is associated with the risk assessment or assessment or risk determination as such. So these are the 3 pillars which were introduced in Basel 2 and have been expanded even in case of Basel 3. And overall in case of Basel 3, the institutions which are covered under this will have to maintain a capital of 11.5% of risk weighted assets. Is it okay? Remember that number here. Some of the books will give you 9%, do not get confused. 9% is also true, but the difference here is when they say 9%, they would be talking about capital adequacy ratio only. Is it okay? CAR or capital adequacy ratio. That is how much the capital you must have in order to absorb the losses. That is the basic idea for capital adequacy ratio, or else credit to risk weighted assets ratio. But overall, when you take the capital adequacy ratio of 9% as well as the capital conservation buffer CCB of 2.5%, the banks are supposed to maintain 11.5% of total capital requirement. The same regulation has been applied or has been imposed on all India financial institutions as well. And RBI simply says that these particular 4 AIFIs, that is Exim Bank, NABARD, NHB as well as a SIDB will have to abide by these particular capital requirements and increase their capital regulations, or let's say have capital up to 11.5% of the risk weighted assets by 1st of April 2022. Is it okay? By 1st of April 2022. These are certain very important points which have been mentioned here. Now based on this particular discussion, I have given a question here. Consider the following statements regarding all India financial institutions. First, these are set up under RBI Act of 1934. You might be tempted to say yes, but the statement is wrong. Different legislative pieces have been passed, as a result of which these AIFIs have been established. Second statement, AIFIs are directly 100% owned by the government. Very tricky statement. Why? Let me show you the ownership status. As per the latest report of RBI, this is the ownership status. In 3 of these particular AIFIs, that is Exim Bank, NABARD as well as National Housing Bank, you will see that these are entirely 100% directly owned by Government of India, that is the central government. But look at the fourth AIFI, that is a SIDBI, right? In case of SIDBI, there are different institutions, different stakeholders in this particular SIDBI. The highest amount of shareholding in case of SIDBI is held by State Bank of India. Remember this, around 16.7% of the stakeholding within SIDBI is with SBI. But if you have a look at the statement here, AIFIs are directly 100% owned by the government. What you'll see when you look at this particular SIDBI ownership or stakeholding is, yes, Government of India has certain ownership, around 15% is owned by the government. But in addition to Government of India, there are 22 more institutions, public sector enterprises, insurance companies which are controlled or governed or owned by the Government of India. Is it okay? Which are controlled, owned or governed by Government of India. In simple terms, the 15%, around 15% which is owned by Government of India is directly held by the government. Remaining is basically with these remaining 22 institutions which are again owned or controlled by Government of India. But the statement basically says the ownership of all these particular AIFIs 100% is directly with the Government of India. If the statement otherwise had read, let me give you a hypothetical situation. Rather than the second statement being like this, what if I were to say that AIFIs are either directly or indirectly owned completely by Government of India? Then the statement would be true. Is it okay? Then the statement would be true, because through various insurance companies, through various public sector entities, through various other financial institutions which are again owned by Government of India, government is indirectly plus directly owning even the fourth AIFI. But because the statement says 100% of all the four is directly owned by the government, I would simply say no, this particular statement is wrong. So both the statements are wrong. Right option will be option D, none of them are true. Let me go to the next article, Bharat Bond ETF. Now, if you have been reading the basics in the financial market, one of the very novel types of instruments which will come across is a concept of exchange traded fund. What is this exchange traded fund? Let me give a very simple example here. Imagine you are an investor, you will invest in the stock market, you will purchase certain shares. You will invest in the debt market, you will purchase certain bonds. Rather than investing like this, you will purchase one exchange traded fund which is issued by, let's say, asset management company. For example, mutual fund company. Is it okay? So have a look at this. Rather than investing directly in the stock market or debt market and owning certain securities, what if I were to say that I am the asset management company, I will issue one ETF to you, exchange traded fund to you. You will not be directly investing in the market, but when you purchase an ETF, you will be owning these particular securities themselves. For example, what if I simply say that one ETF, if you purchase this particular one ETF, it is equivalent to investing in one share each of all the banks which are present or listed in the stock market. Or else, what if I were to say that this particular one ETF, if you purchase this, it is equivalent to investing in the 30 stocks, one stock each of the BSE Sensex companies. Or what if I were to say that if you purchase one ETF, it is as good as or it is equivalent to investing in all the central public sector enterprises which are listed in the stock market. So essentially, exchange traded fund is nothing but an investment pool. Is it okay? It is an investment pool which is nothing but a combination of indexed funds as well as the concept of mutual funds. And if you have understood mutual funds as well as index funds, ETF is a mixture of both of them. That is, if you purchase one ETF, it is a basket of different securities. Is it okay? Right? The ETF will consist of different securities. For example, you can invest in debt ETF, you can invest in equity ETF, you can invest in forex ETF, you can invest in commodity ETF, etc. And very recently, this particular concept of ETF was there otherwise also in the newspaper, because SEBI, which regulates this particular concept of ETF has allowed for the first time silver ETFs. Remember this, has allowed for the first time silver ETFs to be issued in the market. And as such, in case of Indian economy, there is already presence of gold ETFs, gold exchange traded funds. Now, have a look at this. In addition to these particular silver, gold ETFs, which are nothing but commodity ETFs, central government has equity ETFs, also has debt ETFs. Meaning what? If you purchase one equity ETF, it simply means that you would have invested in the shares of multiple companies. Whereas, if you purchase a debt ETF, it simply means you would have invested in the debt instruments such as bonds of different companies. And Government of India, in case of equity ETF, has issued CPSE ETF, has also issued Bharat 22 ETF. And in the year 2019, Government of India also came out with the concept of the debt ETF, which is famously referred to as Bharat Bond ETF. Is it okay? Bharat Bond ETF. Now, what is the concept of a Bharat Bond ETF? First and foremost, because they are using the term bond ETF, it simply means it's a debt ETF. Meaning what? If you purchase one ETF here, it will have a basket of multiple bonds of different companies. But what kind of companies? Government of India simply says, we are going to pull in instruments, that is a debt instruments which are having AAA rating, and these are the debt instruments which are issued by CPSEs. Is it okay? One, these are basically the AAA rated debt instruments or the bonds which are issued, second point, by CPSEs. In simple terms, if you purchase one ETF, it simply means government will collect the money, give it to these particular CPSEs for investment purposes. Right? So, that is a concept of a Bharat Bond ETF which has been proposed or which was introduced for the first time in 2019. Again was second tranche of this particular Bharat Bond ETF was issued in 2020. Now, government says, right, we want to raise another 10,000 crore rupees by issuing the third tranche of Bharat Bond ETF by December. Done? So, these are some of the very important points with respect to the concept of ETF as well as Bharat Bond ETF. Now, based on this discussion, I have given a MCQ here. Consider the following statements regarding ETFs. Bharat Bond ETFs currently invest in top 10 companies with AAA rating. Please be very careful with respect to this number. Top 10 companies, wrong. These are basically investing in AAA instruments of CPSEs, not just top 10 companies. Second statement, currently in India, there are ETFs in equity and debt only. Underline the term only. Is there equity ETFs? Yes. Are there debt ETFs? Yes. But are these the only two types of ETFs which are allowed in India? No, commodity ETFs are already present. Best example, gold ETF. So, even the second statement is wrong. Right option will be option D. None of the above statements are true. Let me go to the next article. Delays in infra projects. Now, this has been there in the discussion post August. Why? MOSPI, Ministry of Statistics and Program Implementation, basically it tracks all those particular infrastructure projects wherein the investment is more than 150 crore rupees. Is it okay? It will keep a track of those particular infrastructure projects wherein the total amount of investment projected is more than 150 crore rupees. And in the month of August, it basically came out with a flash report which stated that there are large number of infrastructure projects. To be more precise, 1670 central government infrastructure projects wherein there is a huge amount of a delay in terms of implementation. And whenever you have this kind of a delay in the implementation, what is the general outcome? There is a cost overrun as well as a time overrun. Is it okay? There is a cost overrun as well as a time overrun. As per this particular article, for these particular 1600 odd projects, the total amount of investment that was proposed was 21.6 lakh crore rupees. Is it okay? 21.66 lakh crore rupees. As per the latest estimate given by this particular report, the cost will not be this much. Rather, it is going to balloon to over 26 lakh crore rupees. Is it okay? More than 26 lakh crore rupees will be spent on these particular infrastructure projects. Now, what is the impact of this? The impact is, first and foremost, the government finances are under pressure. Is it okay? There's a lot of pressure on the finances of the government. Again and again we have been hammering this particular point in the ETW discussion. Second, whenever the government finances are in a disarray, are under a lot of pressure like this, you will have to ensure that whatever money that you spend either on welfare or infrastructure, the maximum efficiency will be obtained, maximum output will be obtained from this particular expenditure. But in reality what is happening? There is a very high cost overrun. As per the report itself, the amount of expenditure that will be overshot on these particular infrastructure project will be around 20% of the original cost of these particular infrastructure project. Meaning what? Imagine for these particular infra projects, my proposal was to spend 100 crore rupees. Now because of all of this, the overall expenditure is going to go beyond 120 crore rupees. That is much higher than what we wanted to spend on the infrastructure project. Now some of you will be wondering as to, sir, why there is a delay in the implementation of all of this? The delay as per this particular report is because of 15 reasons. You don't have to mug up all the 15 reasons. There are certain usual suspects that you will find in infrastructure projects. You can remember them. One, as usual, the report says that there are issues with land acquisition. Second, as usual, the report says that there are issues with respect to inter-department, the cooperation as well as coordination. And as usual, it says that there are issues with respect to financing or getting access to financing, other financing in the market. There are issues with respect to managerial or let's say manpower availability for developing this particular infrastructure. Because of the pandemic, in case of many of the states, there was a lockdown imposed, as a result of which there is a delay in the implementation of these particular infrastructure projects. So these are some of the important reasons or the causes as to why there is a delay in the implementation of these infrastructure projects. Now what is the outcome? What should you write beyond this if at all a question is asked? Two things. One, Government of India has sent a notice to all these particular departments asking them to speed up the implementation of these particular projects. Second very important point here, very recently Government of India has announced Gati Shakti, and we have discussed the concept of Gati Shakti in the earlier videos. And the article basically says because of the announcement of the Gati Shakti, now we can see that, or we can just try to ensure that the implementation of these particular infrastructure projects will be speeded up. And please understand, in the earlier videos also and your static portion also, you will come across this particular point which is very important nevertheless. That is, infrastructure development is very important. Either you talk about the social welfare, or you talk about the multiplier effect, or contribution to manufacturing, contribution to exports. Infrastructure development has got huge amount of positive outcomes, and that is the reason why we need to ensure that there is a faster implementation or development of these particular infrastructure projects. Done? So this is in gist of what has been provided in this particular article. Next, the DOT exempts non-telecom items from AGR calculation. In the last couple of months, even in the last year also, we have been discussing the concept of the adjusted gross revenues. And in the recent times, I'll just give you the update here, and in the recent times, Government of India has come out with various proposals to provide a certain cushion, to provide certain relief to these particular telecom companies. And the latest reform which has been announced by the government is that we are going to change the methodology of calculation of adjusted gross revenues. Two very important points here. One, what is the importance of this announcement? Whenever the AGR methodology is changed, please understand, any telecom company which takes a spectrum, which purchases spectrum, will have to pay certain charges to government. And when the AGR calculation methodology is changed, the amount that the telecom companies pay to government depends on this particular AGR. Is it okay? Right? The amount of charges they are supposed to pay in different forms, such as spectrum usage charges, license fees, etc., depends on what is the AGR. So when you change the AGR methodology, obviously the amount of money that the telecom companies will pay to the government will change. First very important point. Second very important point, the change is applicable prospectively, not retrospectively. Is it okay? I'll repeat it. This particular change in the methodology of AGR will be applicable prospectively, that is from the 1st October, not retrospectively. That is also very important. Now, what is the importance of this? Have a look at this. earlier there was a dispute between the central government as well as the various telecom companies with respect to the calculation of adjusted gross revenues. Government of India basically stated that whether the revenue that you have generated through the spectrum or without the spectrum, that is spectrum related revenues as well as non-spectrum related revenues, all of them will be considered in calculation of adjusted gross revenues. And the telecom companies basically stated you should not consider non-spectrum related revenues in the calculation of AGR. In simple terms, if you go as per the Government of India's formula, the amount of AGR will be very high. So the revenues, or let's say the amount of the revenue that the companies will have to pay to the government will also be very high. So the court, that is basically the Supreme Court of India, took the side of Government of India and stated that yes, whatever is the formula of Government of India, that is the correct formula to calculate AGR. And that is one of the reason which created a lot of ruckus in the telecom sector, and there is a huge volatility in the revenues, or should I say there is a huge increase in the losses which have been incurred by these particular telecom companies. One of the reason is the calculation of AGR itself. Again, one of the reason, not the only sole reason. Now what the Government of India stated here is, henceforth whenever you will have to pay the revenues to us, right, that is a spectrum usage charges which has been exempted from the future spectrum allocation as such, as well as the license fees, we are going to change the methodology of the AGR. That is, out of your total revenues, we are going to deduct the revenues that you have generated from the non-spectrum related sources. Now some of you will be worried as to, sir, what do you mean by non-spectrum related revenues? Examples have been provided here. For example, if you have generated income by selling certain assets, you have generated income by owning certain shares of this particular telecom company and you have earned dividend, you have earned certain income, right, in the form of rent on the property that you have given on lease or rent basis. So there are certain sources of revenue which are nowhere related to the spectrum which is being used by the telecom company. So these particular revenue sources should not be counted as a part of adjusted gross revenues. So in a nutshell, this is the gist of the article which has been provided here. Should you mug up the formula? Please do not mug up the formula. UPSC is not going to ask you the formula. It is just an update here. Okay. Next, another very important piece of information. Very recently, the central bank, that is RBI, has amended certain provisions. As a result of this, foreign investors now can invest in the debt instruments of real estate investment trust as well as infrastructure investment trust. In the last couple of years, these particular instruments have become very important in the Indian economy for real estate developers as well as infrastructure developers to raise money and to develop newer infrastructure projects. In the earlier video, we have discussed what is the concept of REIT as well as infrastructure investment trust. What is the update provided here? It simply states that RBI very recently has amended foreign exchange management regulations of 2021, as a result of which the foreign investors will be allowed to invest in these particular debt instruments which are issued by REIT as well as infrastructure investment trust. Right? Now when I say foreign investors are allowed, what does it mean? In addition to the existing types of investors, for example, retail investors are allowed to invest in these particular REIT as well as infrastructure investment trust units as such. So in addition to the existing investors, now you can expect long-term investors, especially in case of foreign investors, there is a terminology called as patient capital. Right? What do you mean by patient capital? Remember the terminology here. Patient capital, again don't go to healthcare sector here. Patient capital here basically refers to the long-term investors. Generally, in case of the financial market, the pension funds, insurance funds, etc. are considered to be long-term investors. Why? They invest in these particular instruments, hold them for a very longer duration, generally till maturity period. And that is the precise reason the investment which is obtained from these kinds of long-term investors are referred to as patient capital in the stock market or in the financial market. So as a result of this particular amendment by RBI, it is expected that one, REITs as well as infrastructure investment trust will get access to more types of investors in the market. That's the first very important outcome. Second, they can not just attract more investors, they will be able to attract patient capital in the financial market. Third very important point, these particular long-term investors, by investing in these particular REITs as well as infrastructure investment trust, competition is expected to increase, and the price discovery, that is basically the returns that is guaranteed, will also be much better, right? So these are some of the important outcomes which are associated with this particular piece of news here. Done. Next, privatization of airports. Now, what are the important points here? Earlier, in case of privatization of airports, UPSC has already asked a question in the UPSC mains. But in addition to that, right, what are the important points here? In case of the government of India, it has basically proposed that they want to privatize 13 airports by the end of this particular fiscal. Now, what is the importance of this particular news? One, government of India wants to raise huge amount of money by privatizing these particular airports. That's the first important point. Second, they want to attract the private sector investment in developing this particular airport infrastructure. Third very important point, generally it has been seen that the private sector investors are more interested in the profit making airports. Is it okay? They are more interested in profit making airports, not the smaller airports. Now, what government of India has done is, in the earlier round, they basically privatized 6 airports. Now, in this particular round, they want to privatize 13 airports, but all these particular 13 airports are not big airports. As per the proposal that has been put forward by government of India, 7 smaller airports will be merged or will be clubbed with 6 bigger airports, and these particular airports will be auctioned. Is it okay? These particular airports will be auctioned. That is a very important point here. And the private sector which is going to win the bid, because it is going to be a bidding process, whoever is going to win the bid, he will be having the bid tenure of 50 years. Is it okay? The bid tenure is for a period of 50 years. And government of India says that these particular airports which are managed by Airport Authority of India, we are going to change the mandate of AAI. That is, we are going to ask the Airport Authority of India to develop the airports even in those particular regions where the private sector is not interested to invest. Is it okay? So these are some of the very important points with respect to this particular article. In addition to this, there is one more important point here. Earlier, government of India has come out with the concept of a national monetization pipeline. Is it okay? NMP. Under NMP, the government has proposed to basically privatize or monetize 25 airports in the next 4 years. Is it okay? They want to monetize 25 airports in the next 4 years, and these particular 25 airports are including these 13 airports which they want to monetize in the current fiscal. So these are some of the important points with respect to this particular article. Now, next article related to free trade agreements. Now, post 1991, understand the story here, government of India has opened up the Indian economy. As a result of which, we are seeing that we are entering with the FTAs, or we are entering into the trade agreements with multiple countries. More and more multinational enterprises or MNCs are competing to come into India, and Indian government is negotiating or has entered into multiple free trade agreements. But over a period of time, there have been certain concerns which have been raised with respect to these particular FTAs. And these are the same reasons which were cited by government of India not to join RCEP, Regional Comprehensive Economic Partnership. Apart from these reasons, there are multiple other reasons also. But what are the reasons here? Understand those particular reasons. That is more than sufficient with respect to this particular article here. As per the article, and generally it has been found that whenever government of India has entered into a free trade agreement with other country, what is expected is both the countries are going to get the benefit. That is, exports from India will be promoted, exports from the other country will be promoted. So both of these particular countries, trade is going to increase, and both the countries will get the benefit out of this particular FTA. But umpteen times, in majority of these particular FTAs, it has been seen that India's exports initially have increased, especially for example, when you evaluate the FTA between India and Japan. Initially, for first couple of years, India's exports were promoted. Later, India's exports stagnated, and later these have been coming down. So overall, right, if I evaluate the FTAs that have been signed by India with, let's say, other countries, when I evaluate the overall impact of this, yes, the trade has increased, but the trade deficit that India has with other countries with which FTA has been entered, that also has increased. Which essentially means what? It simply means, I am going to the second point here, when the FTAs have been entered into, we expect that both the countries are going to get the benefit out of this. But in reality, the other trading partner has got the majority of the benefit, not India. Now, you will simply ask, sir, why India has not been able to leverage this particular FTAs? I will come to that also. Let me go to the third point before I go to the reasons. The third very important point here, whenever you enter into FTAs, what do? The countries will either reduce the tariffs or eliminate the tariffs altogether, so that the trade between these particular countries are going to increase. Right? As a result of this, it has been found that when Government of India has reduced or eliminated tariffs on the imports have increased. These have become much more competitive when they land in the Indian market, and they have basically replaced the domestic manufacturers in the Indian market. In simple terms, by reducing or eliminating these particular tariffs, imports have become much cheaper compared to the domestic manufacturers, which has affected domestic manufacturing. These are the three very important negative outcomes that are generally associated with India's FTAs with other countries. Now, in addition to this, I stated that the reasons for these are also very important. What are the reasons why we are unable to leverage these particular FTAs? Some of the reasons which have been cited here are: one, the rules of origin, right? That is basically whenever you export and you want to enjoy the benefit of, let's say, lower tariff or eliminated tariff, you will have to certify that certain amount of manufacturing or value addition has taken place in your country. The rules of origin are very, very complicated, are very stringent. That is one reason. The information related to FTAs is not known to every exporter in India. The third very important reason why we have not been able to leverage these particular FTAs is, whenever you want to export, the rules are very, very complicated. Right? Multiple agencies are involved, cost of logistics are very, very high, etc. So these are some of the reasons why the FTAs have not been working in favor of India. And this becomes very, very important. Why? For a simple reason, India has started negotiating or started renegotiating FTAs with multiple countries, and these particular points have to be considered by Government of India before entering into new framework, or let's say the FTAs with these particular countries again. So these are some of the very important points related to these particular article. Now, based on this, straightforward question, static based question, arrange the following in increasing integration level. In the static portion, I am pretty sure you have come across the concept of economic integration. The beginning of economic integration out of these particular four will start with the free trade agreements, FTAs. After FTA, you will come across customs union, then you will come across common market, and then the last phase of economic integration will be economic union. These are the four stages. If you go from left to right, this is an increasing integration. Again, this is a question from the static part which already has been asked by UPSC, and the same kind of question has been asked at multiple state level PSC exams also. So first, second, third and fourth, this is how the increasing integration or economic integration will take place. So right option will be option D here. The last article for the day from the vault of the PIB, Sambhav, an awareness program has been launched very recently by Ministry of Micro or MSME, Micro Small Medium Enterprises. Is that okay? First point. MSME, the Ministry of Micro Small Medium Enterprises has launched a month program. It is simply for a month program or awareness program by the name of Sambhav. Under this, the government says that we are going to go to multiple institutions, educational institutions such as ITIs, and we are going to send certain specialists or experts into these particular institutions, educate the students with respect to what reforms or what measures have been taken by Government of India in order to promote MSMEs or let's say MSMEs, right? What measures have been promoted to basically promote the micro, small, medium enterprises in India, and we are trying to push these particular youngsters to take up entrepreneurship and set up these particular micro, small and medium enterprises through the program of Sambhav. So this is one very important point that I found that was present in PIB but was not mentioned in the newspapers in the last week. Done. So these are the various articles as well as the questions related to articles for this particular time period. If you like this particular initiative, please hit the like button, and provide your valuable comments in the section below. If you have not yet subscribed to BYJU'S IAS channel, kindly subscribe to the BYJU'S IAS channel. Thank you. Have a good day.